Hello traders and Market Club members everywhere. Adam Hewison coming to you from the digital studios of Market Club. Well, it's quite a day. You can see why I'm tongue-tied because the Russian ruble has really taken a hit today. You may remember yesterday they moved interest rates up to 17%, which sounds terrific, but you lost that today just by holding rubles, and that's how scary the situation is. We may have come to a reversal in this currency, but it's still too early to tell. You can see all of our trade triangles all very positive. This is a daily chart of the Russian ruble. You can see a dollar against the dollar, and we're going back to where our first monthly trade triangle kicked in. That was on the 5th of August 2014 at 35.93. We're currently trading at 71. It's lost half its value in just a little over a year, which is pretty amazing. Now, what's even more amazing, and I'll show you this. Now, remember the date, the 5th of August, 2014. Crude oil monthly kicked in on the 14th of August at 93. This is the Achilles heel for Russia. That's crude oil. They rely on it's 25% of their GDP, and by cutting this oil down, we didn't have to bomb Russia. We didn't have to do anything. This is an economic nightmare for Russia. They rely so heavily on crude oil for cash that by cutting it in half, and that's exactly what you've gone from over 100 to about 50, which is exactly about the same percentage as the Russian ruble has lost. You can see how closely it's tied. That's something, a benefit that I don't think anybody realized. I mean, cheap gas is great for driving around here in the States, but it's really, really hurting Russia. So again, the trend is clearly down in the Russian ruble. It's clearly down in crude oil. When this crude oil changes trend, the Russian ruble will change trend as well. Let's move on. Here's the USO, which is the ETF. You can see that's down again today. We're down almost 1% in the ETF, trading right around 2088 right now. Very heavily oversold. No secret there. This has been a phenomenal market. You can see we've been short from 33.64. That's $13 on what is now a $20 stock, which is a tremendous return on capital. So again, the trade triangles have won out, done very, very, very well. Looking at the dollar index is sort of flattened out a little bit. 65 is sort of flattened out, but again, the trend is clearly up. We're just dipping below the 50 line, which is a little bit disconcerting, but we'll have to watch that very carefully. But again, the trend is clearly up with both the weekly and the monthly trade triangles intact. Here we're looking at gold. We still think gold's going to be a bigger market on the upside. So here's what we see in gold, and this is what we're looking for. We think we're creating what we call a reversal pattern. So here's the first part. Here's the second part. I think we're going to come down one more time, probably to this 1180 area, and then start to turn up again. And this is going to be the absolute area you want to watch very carefully. Should we come down like we're expecting this market to do and regroup and then start to move back up and break this line, then you've got a clear case from going from 1240 for the low here, 1140, so to 1340, which will take you right back up to here, which takes you right back to this area here. So that's how we see this market. But I think gold is going to be like choppy until 2015. Watch this market very carefully. You can see our trade triangles are plus 55, indicating a trade range, which is what we want to see. And we're back down to the 50 line on the RSI, indicating potential support. Watch this market very carefully in 2015. Okay, we're looking at the Dow right now. You can see the Dow, had a signal on the 10th of December. That's 6 days ago, and we've had a fairly big drop in this market. I'm going to put in the Fibonacci numbers because that's where we're looking if this market's going to find some support. It's found some support at the 38.2% level. I think we're going to see this market come down further. I would not be surprised to see a little pop. Remember, we talked about Tuesdays being potential reverse days. If you're short the market, take your profits on the opening. And that's pretty much what's happened today. So let's see how that plays out. But nonetheless, the intermediate term trend is down. If you're an intermediate term trader, you should be out of this market right now. Much the same picture for the S&P 500. You can see the markets have moved down quite steadily, and now it's just beginning to sort of stabilize. Very oversold. We're below the 50 line. What'll be interesting to see here is if this happens, is if the market rallies back up. Let me get the right pin on. If it rallies back up to the 50 line, that's probably an area that you can sell it, much like it was here. You see how it just kept going to the 50 line, And if you just draw that up there, you see that was a good place to sell. And again here. So again, that's the resistance level until we get really, really oversold like we're getting close to here. So let's watch that very carefully. And if we put our Fibonacci's in there, we can see this market can actually go lower than we are right now. So let's just take a quick look at our Fibonacci levels, and here you are, same 38.2%. We can see it going down to the 50, which is 1949, and 1919, which is a classic 61.8% Fibonacci correction. So let's see how that plays out. NASDAQ, which gave us a major sell signal yesterday, that's an intermediate term exit signal, not go short necessarily, but just be out of the market. That still looks very heavy to us. We can see that going down. We'll put our Fibonacci numbers in there too. So pretty much they've all had like a 38.2% correction from the highs, which is okay, but I still think we'll see this market go lower. But again, watch the RSI as an indicator of resistance. I think that'll be your first clue. If we see a rally back up, just a little blip up here, but you see it coming down to that 50 level, I think that's the level you're going to watch to sell against that if you want to be a trader. But again, these are thin markets. They're going to be choppy and volatile, so be careful. But again, the amazing correlation between crude oil and the ruble, if the crude oil continues lower, which we think it probably may still go lower, then it's going to be pressure on the ruble, and they'll put in capital requirements in the USSR, and we'll see what happens. Do they still call it the USSR? I don't know, but it's Russia. Anyway, the bottom line is trade with the trend. The trends tend to persist longer than you expect. Hey, I'm Adam Hewison for Market Club. Thanks for stopping by. Have a great day, everyone.